First off, how critical is housing to the macro CPI print?
It's the easy way. It's a big chunk of it. And by bringing down housing, the Fed can get a lot of mileage out of the decline in inflation. Take a look at, we have a pie chart, I think, available here, and it shows that housing is 30% of the CPI. It's
wow.
Look at that. And it's more than, much more than food, much more than energy. More than food and energy combined is your housing. Medical care is in there. Energy is 9%. But shelter is 32% of the CPI. So you figure if you bring down housing, you get a lot of bang for your buck in terms of the impact on inflation. Unfortunately, guys, if you go to the next chart, it's going the other way. Take a look at the housing component of inflation versus the core index. You can see the core index, Brian, actually moderated. And then look at that white line has kind of gone flat to a little bit down, but look at housing. It's going straight up, and it's expected to continue to go up because of stuff that Diana Olick is doing.
Yeah, well, and before I go to Diana, one more thing, because I'm not the economic genius that you are, Steve.
Oh, yeah, right.
Is the housing component, is that only rents, or does it somehow take into account price, or it probably takes in both because somebody eventually owns the home you're renting? It's
more complicated than you care about or have time for, Brian. I promise you. What it is what's called, essentially for the housing component, it's owner's equivalent rent. They don't want to get the price component into the basket. They only want the cost component in there. So they take an equivalent of renting your house from rents. And what's coming on with rents? Hold on. We have a quote here from Fed Governor Chris Waller, who spoke earlier today. And what he expects, take a look, on housing services, that's the general idea of renting houses and the cost of it. I expect to see sizable increases in this component of inflation for a while as the recent rise in new rentals makes its way into aggregate price measures.
Look at Diana on the giant screen. She's thinking. She's like, Liz, I saw you. You're like, your eyes roll, and you're like, okay, Waller, where am I? How do you bring down housing, Diana?
Well, I'm just trying to look at all these charts. You know, his charts are a little more colorful than mine, but I'm looking at, we are seeing rents start to moderate. And I know we're seeing more single-family rentals come onto the market. We're seeing build for rent, and there's so much demand in that single-family rental market. But I've got new numbers out today, actually, that show that apartment rents are starting to moderate. They're rising at much slower pace than they were even 6 months ago. And we do start to see home prices start to fall. We saw that from June to July, the first monthly drop in home prices, which usually always go up from June to July, in over 3 years, and the largest single monthly drop in over a decade. So we are seeing some of that heat come out of the housing market, and that's because of what you're seeing in my chart right now, which is the average rate on the 30-year fixed is now twice what it was at the start of this year. And what that means is that affordability is just plummeting. And that means that it costs, actually, if you're buying a $400,000 home, it costs $700 more a month today than it would have on January 1st on that monthly payment. So you are seeing prices come down. You are seeing supplies start to come up. And that, again, will bring prices back a little more. So
interesting.
My argument is, okay, I know his chart had it going directly up, and I don't really want to understand the owner's equivalent rent, but I do. But I do think that there is some heat coming out of prices for both rents
Diana,
and
here's the question.
Here's the
question I have, because first of all, I don't think about housing until I listen to Diana talk. She's like the 18th Fed person to me, right? Okay. Ooh. So just to be clear, Diana, here's the problem. You have this attempt to bring down housing cyclically by the Federal Reserve, and yet there's this secular imbalance in the supply. We have been underbuilding housing for 10 years, which says to me, or suggests to me, there's a limit to how much it can fall, which says to me there's a limit to how much disinflation housing will ever contribute to the CPI.